So, these points really bring us to our next leader, because we really need to have a better understanding between governments and the private sector. What is a trustworthy technical trade-off between what the developer gets paid, how much return the project has, and how much subsidy from the government and development partners, and what's the framework for looking at that? So our next leader is Uche Orji, Chief Executive of the Nigerian Sovereign Investment Authority. And Uche, I know you've been dealing with so many of these issues on the ground. It's a very political kind of issue, and there's a roaring debate that somehow sovereign and pension funds would never participate in the early stage of development, given, of course, the high risk level in project development. So how do you see that issue? And what do you see as the blueprint, based on your experience, about how we actually put together systems so that sovereign wealth funds and pension funds can responsibly invest in early project development, or is there another solution? How do you see it?
Sure. Well, thank you very much. First of all, let me start by apologizing because this panel is running 30 minutes late. I have another commitment, so at some point I'll just leave the stage if you don't mind. So sincere apologies. And as a consequence, I'm going to keep my comment very brief and straight to the point. Let me start by giving some context to the organization that I run. It's called the Nigeria Sovereign Investment Authority. It was set up about 4 years ago, and the objective was to do the following three things. First of all, it's a tool of fiscal discipline. So the government has been through decades of boom and bust cycles with oil price, and they have periods of excess revenue followed by periods of very weak revenues. And there was no mechanism for saving and using that revenue appropriately. And so, through a legislative process, the Nigeria Sovereign Investment Authority was set up such that in the boom cycle, the oil revenue gets put into our fund and to help us do the following three things. One is to provide stabilization support, save for the future generation, and then invest in Nigeria infrastructure development. And our asset allocation is 20% is in stabilization, 40% is in future generations, and then 40% is in Nigeria Infrastructure Fund. And this is really speaking to the point that is the topic of this conversation. There were four things that we saw at the very beginning. The first is what everyone has said at this panel, which is how do you develop projects? In Africa, everything is to do as far as infrastructure is concerned. And you do not compare this market to developed markets where some of this infrastructure that were being privatized later on had been built hundreds of years ago in some cases. So this requires actual investment. And I agree with the point that government owns almost every infrastructure. So as a consequence, we found that we had a role to play because our organization is also set up to run as a private sector entity, even though it's owned by the government. And so we found ourselves playing that role as a bridge between the private sector and the public sector. So of the infrastructure fund, we dedicated 1.5% of that to project development. And there we want to co-invest with people who develop projects. We've invested, actually about to make an investment in a power development fund. And the role of that fund is to actually help develop power projects. Now, we run it the same way any of the other development companies run. We expect to make significant returns on the basis that one of three of these projects don't get to completion. And so we try as much as possible to recover the investments we make in this. So the returns are actually fairly high that we expect because the risk is very high. So the point here, number one, is that we as a government-owned entity are willing to participate with the private sector actually to develop these projects. The second thing we saw was the lack of the bond market. I mean, the bond market doesn't exist, really. It's easy to buy government bonds, and 14, 15%, or in the case of some countries, 20, 25%. So why would pension funds even bother to participate? So one of the things we did was to actually make that possible for pension funds to participate. We found that there was need for credit enhancement to create a bond market. And so we went ahead to create a company called Infra Credit. No borrowing from Infraco, but Infra Credit's role is also a company that was, at the beginning, we worked with Pitch to develop this company. It took us 2 years, 2.5 years to put together. But the job of Infra Credit is to provide bond insurance for infrastructure bonds. And so that way we can get longer term funding, we can get pension funds to participate. Almost every bond associated with infrastructure in Nigeria is not investable. But if we stand in the gap for that bond and then create some kind of enhancement and use the AAA rating of Infra credit to enhance the bond for that, it becomes investable. And that is just got launched in January. We're doing this in partnership with Garantco, who put up 50% of the contingent capital. So the role of Infra credit will be to actually start to get the bond market going. So that's the second thing we attacked. The third thing is the legal issues. And I've listened to the points about political risk, transition in government, and all of that. I think that you're starting to see African countries create sovereign wealth funds similar to what we're doing. And I think there is no better political risk, at least mitigant, than an entity like ours. So people that co-invest with us, actually, I think it's easy to go from one government to the other. It hasn't been fully tested, but so far it has been somewhat tested in Nigeria, where we have seen our entity go from one political party to another political party, and their deals are not touched. So I think to some extent that starts to give us confidence that these entities can actually play this role. The fourth thing that was mentioned here, and I'm going to respond to that, is the issue of corruption. And I know people talk about that, but I think there is something changing, and there's something really changing in the sense that you're seeing more democratic processes start to drive entities to behave better. Our organization, and I'm probably just going to mention it, and this is the fourth year in a row where we have been top quartile ranked for transparency and governance by the Sovereign Wealth Fund Institute. Now, there are just simple ways to do this. The first is accountability. We publish our accounts quarterly like any other entity. We publish it quarterly, audited by Pricewaterhouse, and so as a consequence, we try to set a fairly high level of governance. And I'm hoping that over time, this starts to fade in the rear mirror, because everywhere I go, people talk about this, but we're trying as much as possible to set a standard that this thing can actually be fixed. The big elephant in the room for most African countries, particularly for Nigeria, is currency risk. And managing currency risk has been something, because also we're a dollar-denominated fund. And so I understand the challenge people face with those things. The reality, though, is that on the one hand, there's expectation that the returns are so high that it will offset it. And that's the case in most cases. But there are also smart ways to try and hedge the currency, which is very expensive, but we've done quite a few of those. A long list to go through at the moment. But the point here is this. My three key points are the following. Sovereign wealth funds exist in Nigeria, exist in Africa, to play the role of helping crowd private capital into projects. Yes, it's difficult, but there are ways to manage everything, including political risk, legal risk, as well as currency risk. And that's the role we play. I'll just leave with one final point. One of the things we're doing is we're actually creating registered co-investment funds. So we've done one at the moment with Old Mutual for agriculture, and we've also with UFF for agriculture and Old Mutual for real estate. And we're about to do one or two others for middle market industrialization. These are real funds. We put capital in it, our partners put capital in it, we raise external capital. So these are so many things that are coming out in the continent and coming out in places like Nigeria that I think will make it easy, that the next decade is not going to be as difficult as the last one. I'll stop here. Thank you.
Again, I'm really just amazed by the scope of indigenous solutions. And yesterday we talked a lot about how do we have effective ways of sharing. I mean, we really need to cross-fertilize because these are homegrown solutions that could be very relevant. Since you're leaving, does anybody have a question right now for Uche? Quickly? Do you have to leave right now?
5 more minutes.
Okay. But if somebody thinks, yes, we have a question there. Can we have a mic? Do you want to just get up and, oh, a mic is coming. Or here. He's there with them.
Hi, good morning. Good morning, can you hear me? Right, my name is Philip Gray. I'm with Gib Capital, and my questions are specific to Uche because he's leaving. I've had quite a number of interactions with the NSIA and also TIB. I've got three specific questions. The first one is, speaking with the TIB, they're in the market for the buildup of a $500 million fund aimed at infrastructure funding. How much of this is being driven by NSIA? Number two is, how is the NSIA effectively supporting infrastructure considering some of the projects have protracted, for example, Lekki Port, Second Niger Bridge? I mean, I appreciate the whole bond story and whatever. You know, it's a good initiative, but it's been there for a long time. But if we can't even close, for example, Lekki Port, which has been dragging for the last 7 years, how can that begin to build confidence in the market when you start talking about other initiatives?
Sure.
The last question is, what is a 5 to 10 year growth strategy for NSIA based on specific milestones related to governing policy, which speaks towards some of the comments that were raised by the group executive for DBSA with changing governments, changing policy? If it's privately owned to some extent, but influenced by policy, how is that going to play out when government changes in Nigeria, which then speaks to some of the issues that are already obtaining in the country and have been for many years? Thank you.
Sure. Okay. Thank you for that. And I'm sorry for changing the dynamics of things. I really apologize, but we were a little behind and have other commitments. But let me address your question. On the TIB fund, we're looking at it like anybody else is looking at it. So it's a TIB. TIB is called the Infrastructure Bank, which is a bank in Nigeria that's raising a fund for infrastructure. That's what you're talking about. We're looking at it, and we've been in discussions with TIB. They started this discussion with us at the very early concept. We haven't made an investment yet, but we're considering it. So it is independent of NSIA. NSIA will invest as an LP. NSIA is invested in over 32 different funds, of which 8 are focused on Nigeria. So we do both, LP investments. We also do co-investments. So for us, this is an LP opportunity to invest with TIB. So that's really how it works for us. Now, in terms of the length of projects, yes. I mean, when we entered Second Niger Bridge, we told the government the development phase would take 5 years at a minimum. It's doing ESIA to international standards, is the legal structure, it's ensuring there's a tolling policy. Second Niger Bridge is a very long project. It's 11.5 kilometers of toll and road. And it's as big as the Third Mainland Bridge, by the way, in Nigeria, in the way it's designed. And so, the political issue in Nigeria is, why do you want to toll one part of the country, you're not tolling another part of the country? So we co-sponsored a tolling policy through the National Assembly to make sure that there's a policy that cuts across the country. And so that provides a basis to mitigate the regional political tensions that will arise as a consequence of that project. That is still going through the National Assembly. It's gone through first reading, second reading, is now about to be passed into law. So these are things you need to put in place. The legal environment in all these countries are still very virgin, okay? The laws, when they are written, it reads very well. But when you start to implement it, you find it is not so easy. There's a big difference between theory and practice. Mm-hmm. We need to put these things all in place. The third thing, and the main reason why these things take so long, is the lack of capacity in the federal ministries to actually respond. So you hand a concession agreement to the Federal Ministry of Works. It takes a long time. We had to offer to say, look, let's hire you a lawyer. Let's hire you Alan Novery, Clifford Chance, somebody to help you. Because the truth about it is we have to bring these things to a standard where we can take them to the international community to fund. And this is really where it all fails. Part of the reason why people take time to respond is because they don't understand what they're reading. And so all of these things speak to capacity building. There's a lot of work being done there. DFID is helping, USID is helping, NSIA is helping. But look, this is an opportunity, not a reason to abandon these things. So yes, it's going to take time, it's going to go through political transitions, but the key is not to give up. The final issue you raise is the long-term growth strategy. Look, on the one hand, we can sit around and wait for oil price to rise and we get excess crude revenue. That's a core base of the strategy. But the key thing we're doing is twofold. One is co-investment. We had expected that the NSIA, for every $1 we put in infrastructure, we can mobilize 2 to 3 times external capital. Now, we've started. It's slow the way it started, but I think the reality is we're going to try and get there eventually. And the second key strategy is actually asset management on behalf of the government. So we've asked the government to look at things like real estate. There's a lot of real estate underutilized and owned by Nigerian government all over the world that needs to be properly managed. Now, this is the strategy of the likes of Temasek, the likes of Kasana, the other assets that can be transferred. So assets that are really, you don't want to privatize, but could be managed better. So the Sovereign Wealth Fund provides a platform for that to happen. So that is how we intend to grow. It's through co-investments, it's through partnerships, and it's praying the oil price continue to stay high so we can get some real cash coming to the fund. But all in all, let me just leave you one final point. And this speaks to all the sovereign wealth funds in Africa. These funds are new. You're measuring them against funds that have been around for 10, 20, 30, 40 years. Most of these funds you're measuring them against for the first 10 years did absolutely nothing. It was a capital accumulation phase. So when I look at my friends in Kenya, Uganda, Nigeria, Angola, everyone doing something, I think the reason this platform exists on Senegal is to help and encourage the consistency. Governments must support this through one cycle after another, because it's 20 years from now it starts to make the real impact, as long as it doesn't get killed in the very early stages. And so my counsel to everybody else is also don't take on too much, because one bad investment when you're a $500 million fund could kill you. And people just walk away. The politicians say, no, we don't want to do this again. So it's striking that balance is part of the reason why you see the development of the NSIA being a little bit, I don't want to say slow, it's being managed.
Uche, thank you so much for sharing the innovations and the struggles to be able to create the sustainability. But that's our shared challenge and shared opportunity. Thank you so much for joining us.
Doing business in Africa, you can't afford to be without Africa Investor.